Coming up on Market to Market. Voters in Colorado and Oregon consider mandatory labeling of GMO foods. More cows and more production. September dairy production rises into record territory. And we'll soar into the wild blue yonder to examine the role of drones in maximizing yields. Those stories and market analysis with Naomi Bloom next.
Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com. And by Sukup Manufacturing Company, offering a full line of grain drying and storage equipment and steel buildings. Sukup Manufacturing is on a mission to protect and preserve your crop and the tools that produce it. This is the Friday, October 31 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Mike Pearson. Government data this week revealed the U.S. economy grew significantly between July and September. According to the Commerce Department, gross domestic product, the broadest measure of economic activity, rose at an annual rate of 3.5% in the third quarter. Business spending on equipment grew at a 7.2% clip, while export sales rose 11%, offsetting a 1.7% decline in imports. And federal spending on defense shot up by 16% in its largest increase in 5 years. The outlook for military spending is likely to be heavily influenced by the outcome of Tuesday's midterm elections. Whether Democrats cede control of the U.S. Senate to their Republican counterparts is attracting the most attention. But voters in some states also will consider proposals on everything from mandatory labeling for products containing genetically modified organisms to further reforms on laws regulating marijuana.
This vote, the yeas are 64, the nays are 35.
The balance of power in the U.S. Senate is in play next week when 36 of the seats are up for grabs. Republicans need a net gain of 6 seats to take control of the chamber. Additions could be made in states like Iowa with the retirement of Tom Harkin. Republicans would regain committee chairmanships if they can put 51 senators in their column. Currently, Michigan's Debbie Stabenow is the chair of the Senate Agriculture Committee. However, if Republican Pat Roberts can survive his election with independent Greg Orman, Roberts would be in line to gain the gavel of the Ag Committee.
And I deign anybody to declare any farm program that's being considered as welfare. My God, 90% of the people in this town think it's welfare now.
Roberts chaired the House Agriculture Committee in the 1990s. The Kansas Republican voted against the most recent farm bill, citing too much favor given to Southern interests and citing a Tea Party primary challenge to appear more fiscally responsible.
Congressman Joe Garcia supported Obamacare. Who paid the price? Florida families and seniors.
The nonpartisan Center for Responsive Politics estimates more than $4 billion has been spent on just the congressional races alone. But other items on the ballots are garnering attention and financial backing. Voters in 5 states will decide whether to increase the minimum wage. If approved, Alaska and Illinois would bump their rates immediately, while Nebraska, South Dakota, and Arkansas would phase in the higher wage over time. The Bakken has provided riches to residents of North Dakota, and next Tuesday, voters will decide if they want to set aside 5% of the tax revenue for land and water conservation. Colorado voters will see a measure on the ballot asking for approval to make it more difficult to engage in fracking by oil and gas drillers. And they're being asked to greenlight a proposal mandating genetically modified labeling on those foods. Oregon has a similar measure before its voters.
Vote yes for the right to know.
Proposition 105 would hurt Colorado food producers.
Please join family farmers in voting no.
Vote yes on Measure 92.
Like most races on the ballot Tuesday, outside money is helping fund the campaigns. That is true in both Colorado and Oregon's label initiative. In the Beaver State, nearly $20 million has been spent on campaigns for and against a controversial GMO labeling issue. More than 94% of the money came from outside of Oregon.
We got some legal weed.
And marijuana supporters, who gained victories 2 years ago, have measures on the ballots in 3 more states, looking to ease regulations of the drug. Alaska, Oregon, and Washington, D.C. would allow small amounts of pot to be legal for private use by adults. Florida will decide if medical marijuana should become permissible. University of Minnesota researchers are using drones to survey the agricultural landscape in more than a dozen counties. The unmanned aerial vehicles are being deployed to scour the crops for soybean aphids that wreak havoc on the oilseeds. By using drones in the fight to eradicate pests, the university hopes to advance the new technology, which currently is limited to non-commercial operation. The FAA had planned initially to allow widespread commercial drone use by 2015, but that's looking increasingly unlikely. Nevertheless, some producers aren't waiting for the government to clear the runway for a technology that some say is a game changer. Josh Bittner explains.
To the untrained eye, the sight of a UAV, or unmanned aerial vehicle, soaring over the rural landscape might seem like an amateur activity. But the machine soon could become a key weapon in a robust agricultural arsenal.
The nice part is that the two of these work really close together. So if you have any issues with anything, you're in constant contact with the ship.
If early adopters are able to chart the course, someday drones could be as common on farms as tractors. And with cheap technology blossoming, some tech-savvy producers are already attempting to hack their fields.
It's just another thing to give the grower control, and that's really what it's all about. That's what everybody wants.
As technological innovations flood the market, the cost of their high-tech components, also found in drones, are driven down by economies of scale. And affordability could offer significant opportunities in the wild blue yonder. A 2013 report by the Association for Unmanned Vehicle Systems reveals the UAV industry will add over 100,000 jobs and $82 billion to the U.S. economy over the next decade.
I have no understanding where they come up with those numbers.
While the exact figures are disputed by some, few expect the steady rise of autonomous vehicles to subside. However, adding a new skill set to the farm is rarely an out-of-the-box solution.
You know, I've had farmer customers say, well, you know, I can go on Amazon and I can buy one of these for $100 and put a camera on it and I'm in business. Well, no.
And while a budding industry spreads its wings, there are complications which prevent it from moving forward on the right side of the law.
The ships have come a long way. They fly longer, they're safer, but we're waiting for the FAA.
The Federal Aviation Administration, which holds ultimate jurisdiction over the use of drones, was ordered by Congress in 2012 to formulate rules integrating UAVs into the national airspace. But the FAA has warned it will likely miss a self-imposed 2015 deadline, citing safety concerns for traditional aircraft. Currently, the majority of drone flights in the U.S. are conducted by hobbyists over private property below 400 feet. Commercial operation technically is illegal, but progress is being made. Exemptions have let some companies, largely in the entertainment industry, lift off. The government also has established test sites tied to 6 states, each focused on a different UAV specialty. In upstate New York, for example, drones are evaluating methods to scout farm fields using several types of sensors. It takes time to gather and evaluate the data, but armed with a vision of increased yields, decreased runoff, and the ability to feed the world on existing acreage, some farmers are already embracing the high life.
It's a different approach. We like to call it a systems approach.
Illinois-based 360 Yield Center is looking for ways to maximize every grain of potential on farms. As UAVs buzz over commodity crops capturing multi-spectral images with modified cameras, computers on the ground digitally stitch the images into an agronomic tapestry. And the different infrared wavelengths offer crucial information about plant health.
It's when you go to the NDVI enhanced photo that now you can really start to pick out the differences of what's going on there.
Normalized Difference Vegetation Index, or NDVI imagery, allows producers to make timely, corrective, cost-saving prescriptions regarding nitrogen, pesticides, herbicides, and water application at any time of the growing season.
Today is the best yielding corn that this farm has ever raised, ever. And I mean ever. And it's due to a lot of great management, and we've put in a sub-drip irrigation system that's taken this farm to places it's never been before.
While drones of diverse pedigrees and varying capabilities wait to be cleared for takeoff, it is the culmination of several innovative applications that may elevate precision agriculture to new heights. During the growing season, strategies are developed through thermal readouts and on-the-spot soil analysis in hopes of record production.
I would classify this as a very efficient system.
By working both sides of the equation, with robots in the air and irrigation below ground, agronomists can funnel resources to where they are needed most.
We're using drones and soil scans and different things to sense what's out there in the field. And then we come back and we utilize this tool. Because this is always underground, we can apply at any time. We don't have to throw it on before the crop because we're putting it in that root zone.
I think it's important that everybody in the room understands I don't sell ships, never sold ships. You cannot hire me to fly. No one has ever done that. People have hired me to speak, okay, several people. But what I talk about is what you can do with this technology. So let's dive right into this.
With a background in aviation and farming, Chad Colby is a tireless promoter of drone use in the realm of agriculture.
Do you know right now out west, people are putting thermal cameras on this, flying over their livestock and determining whether any of their livestock has an illness right now, has a fever? I mean, that's what's happening right now. I mean, and it exists. It's not super expensive either.
Many in the ag sector are eagerly waiting for an opportunity to profit from UAV flights. But advocates for agricultural aviators, particularly those who roll, twist, and turn at low altitudes, are skeptical of the economic forecast for unmanned systems. The very nature of their work could put them in close proximity, so crop dusters are following the issue of drone assimilation intently.
There's a tremendous amount of misinformation out there. Those numbers are blown out of proportion. If you look, those are the people who manufacture these and who sell them and who want to provide a service. And of course, they're foaming at the mouth because there's a lot of money out there to be made here.
Ahead of comprehensive FAA rules, UAVs will undoubtedly continue their progressive march. And for some on the bleeding edge, patience is a virtue.
I think at the end of the day, it's like everything else. You can fly this equipment halfway and do a halfway job, or you can fly it with the responsibility that goes with it.
For Market to Market, I'm Josh Bittner.
Next, the Market to Market report.
The U.S. average price for unleaded gasoline fell to $3 per gallon Friday and is expected to drop below that level for the first time since 2010. According to the AAA, prices at the pump declined by 33 cents in October, thanks mainly to plunging oil prices. Gasoline actually was cheaper than milk in September. But that trend may be short-lived, at least in the dairy parlor, where declining exports, herd rebuilding, and record per-cow production are threatening to push dairy prices lower. California likes to lay claim it has happy cows. But Colorado's ladies set the per-animal pace in milk production recently, handily beating the 2,000-pound mark. In fact, the milk is flowing well overall in the group of 23 major dairy states monitored by the Agriculture Department. Those states' average production of 1,804 pounds per dairy cow represent the highest mark for any September since the National Agricultural Statistics Service began the current data collection in 2003. Cows in Colorado, Michigan, and New Mexico all surpassed the 2,000-pound mark. Bob Kropp, professor emeritus from the University of Wisconsin, believes farmers are feeding the cattle more corn and meal as grain prices drop, resulting in higher milk production. Many Midwestern states also had better haymaking weather this summer, which benefited the cows. Total U.S. milk production increased 4.1% year over year in September to 15.5 billion pounds. Colorado enjoyed the greatest gain at 10.8% more per cow compared to a year ago. But states with far more cows, such as California and Wisconsin, still led in total dairy production. However, in his most recent dairy outlook, Kropp wrote that the combination of increased production, slowing of dairy exports, and higher dairy imports may be pushing dairy prices down. Class 3 milk prices averaged $24.60 per hundredweight in September. That's up 10.5% from the previous month, and it's up more than 35% from September of 2013. But Kropp expects that trend to reverse in the weeks ahead. Butter prices, which normally don't decline until holiday orders are filled in November, have been trending lower in recent weeks. Grain futures contracts extended their rare harvest rally this week, despite disappointing export inspections for corn and a stronger dollar. For the week, December wheat gained 15 cents, while the nearby corn contract moved nearly 25 cents higher. Soybeans also rallied as the January contract advanced by 45 cents. Nearby meal prices followed suit with a gain of $38.80 per ton. In the softs, cotton added to last week's gains as the December contract advanced by 64 cents per hundredweight. In the dairy market, November Class 3 milk gained 51 cents, while the deferred contract improved by 35. Over in livestock, the December cattle contract lost 85 cents, nearby feeders were off 43 cents, and the December lean hog contract gave up $2.23. In the financials, the euro lost 14 basis points against the dollar. Crude oil continued its decline as the December contract settled with a weekly loss of 47 cents. COMEX gold declined by more than $60 per ounce, and the Goldman Sachs Commodity Index gained 3 points to settle at 540.5. Here now to lend us her insight on these and other trends is one of our regular market analysts, Naomi Bloom. Naomi, welcome back.
Thank you, Mike.
Let's jump right into this wheat market. We have been continuing this rally. We're coming up on 4 weeks now. Does it look like it still has some legs?
The wheat market is really running into some overhead resistance right now for 2 factors, fundamental and technical. The wheat futures were able to get right up to that 100-day moving average, which was a really big target for that market to get to. And now we've been there, done that, and so we're probably seeing prices move just a little softer in the coming weeks. Because fundamentally, we still are looking at a large global crop, but there have been a few weather hiccups along the way for Russia and Australia. Actually, the Russian crop, normally they were looking for about a 59 million metric ton crop, and it's only going to be around 50 because of dry weather there. But in the United States, our production for what's getting planted right now for the winter wheat crop is expected to be 2% larger, and in Argentina we actually are looking at increased yields there. So what is coming down from one part of the world is going to be up on the other part. So a great opportunity to get caught up on cash sales if you needed to do something like that. But in the big picture, I don't think that we see the market just go crashing lower from here, looking for more of a sideways pricing activity into the end of the year.
All right, now as we jump over into the corn pit, we are still continuing the rally there as well. We've been pushing closer and closer back to that $4 mark, still about 25 cents shy. Where do you see this headed?
Nice rally all through October, really phenomenal, and it's exciting on technical charts if you like to watch those. It posted a textbook bullish Q reversal. This is a huge bottoming signal. So we had a lot of strong export demand pick up because the price, of course, has been so cheap. So that's been part of the reason why that market's been moving higher. And seasonally, truly historically, the market does move higher in October. So like wheat, though, the corn market is up against that 100-day moving average. This is a great time to get caught up on cash sales if you need to, because in November, we are looking for a setback, probably a 50% correction, which takes prices maybe 25 cents to 30 cents lower. I don't feel that we're going to see the market just totally crash and fall apart. But at the same time, because of the global fundamentals being what they are and the crop size here in the United States and more harvest pressure, looking for sideways to lower prices also into the end of the year. But again, that bullish key reversal is a big deal. It's a big deal.
Great indication to make some sales as needed. Now, we also saw this week that that export demand, or excuse me, ethanol demand was really rather strong. Is that anticipated to continue?
It is, especially with the margins being profitable for everyone right now. So we are looking for that to continue to bode well for the corn community as well.
All right. Now, over in soybeans, almost a 50-cent rally this week alone. We're back up over 10, close to 10.46, I believe, in the November beans. What are your thoughts on beans?
Yeah, a $1.50 rally over the past month. Classic case of the export market filling up the pipeline, or trying to fill up the pipeline, and then the soybean meal crushers totally out of product and then needing to get the beans in from harvest. But with a harvest that's late, you have the export market and then the soybean meal market just in major competition. So that's what's been pushing that market higher. It's a legitimate demand situation for right now. And then also with the train issues, it's not just up in the Dakotas. In the southeast part of the country, we have end users there that are booking soybeans for meal by truck or by train, and they're just hoping to see which one will get there first. And then also in the southeast this week was the first time in 2.5 years that an end user there decided to import wheat from Britain because they are so fed up with this whole soybean meal thing. So that market this week rallied also to its 100-day moving average. But the meal is the demanding leader right now. And so we think that the soybean meal, the soybeans, will stay firm going into November, not necessarily looking for another rally because harvest is picking up. But I don't think we see that market have too much of a setback. But again, if you're needing cash flow for whatever purpose, this is your opportunity.
And the meal demand is staying strong, mainly pork and poultry.
Yes.
Is that who's buying it up? Okay, so it's protein is what's driving that market.
Yes, very much so.
Well, speaking of animal agriculture, let's look at the milk market. We saw a little program there. We've seen a tremendous rally in prices this year in milk. Naomi, where do you see us going from here?
Well, the market has had that huge price move all year long, and now just recently we're starting to see things waver a bit because supply is plentiful. Huge supplies right now because the crop was so abundant this year that the cows are being fed well, and that's why the production is so high. So with the whole milk market this year, it's been following demand because of the export market, and then the export market fluctuates because of when the dollar is moving higher. So they go back and forth. The exports get stronger, then the milk futures respond. And so right now, everything has set back for a little bit. And so the milk price is set back. Looking for December and the rest of November to have firm prices in that $19 to $20 area for a while, but then it's wait and see. It's wait and see if demand can keep up or not. And the deferred contracts are waiting in the wings right around $18, and they're content to just sit and wait.
Okay, and so 18 doesn't look like there's a whole lot more downside from that $18 mark as we get closer.
Right. It should hold for a while.
All right. Well, as we look over at the cattle market, we've seen some relative stability. 86 cents in the fat cattle market. Haven't seen that small of a move in quite a while. What's going on on the cattle side? It's
record exports, actually. The last 4 weeks, it has been record exports, record shipments, even despite these huge high prices. So the December live cattle futures have major overhead resistance at 170, but where they can trade in a range is 170 down to 164, where the 40-day moving average is. So that's a really big range, but it keeps the market in a strong uptrend, and we're not looking for the cattle futures to just fall apart by any means because the demand is strong. We're heading into the holidays. It should hold strong, especially with gasoline prices lower. So looking still for that cattle market and even the feeder cattle market to remain firm for now. So it's all coming back on the consumer. They're buying this beef even at these record prices. Even at these record prices, it's amazing. That's tremendous. Now you mentioned the feeder cattle staying strong. We touched up on $2.40. Any chance we might get back into that territory? Not in the short term anyway. For about the last 2 weeks, the feeder cattle futures have been trading sideways, and they are cautious. They are really wanting to have confirmed signs of demand. So probably just more cautious sideways trade there. They could have a little bit of a correction also and still maintain its uptrend, but just looking for just more trepid trade right now. On the feeder cattle side, are we still seeing a lot of heifers kept back, does it appear? Yes, very much so. And in fact, they're talking that there is signs of expansion coming down the road because the heifers are being held back. So the market is very aware of that, but it's not that quick supply and demand turnaround, of course. So looking for firm prices yet for probably another year.
All right.
Yeah.
Now, as we jump over to the lean hog side of the picture, we're coming back into winter. Fears of PED are starting to raise their head again, but the market doesn't seem to care so far, off $2.25 this week. What are your thoughts on the pork market?
That is a wait and see market. The farrowing numbers are up. The all pigs number is higher right now too. And because the PED virus right now is kind of just non-existent, the production is there and the animals of course still are heavy. But the market is just waiting to see if this winter PED becomes another significant issue, because we saw how quickly production can decline because of that. So that market, if we don't see any big PED issues, it probably will work a little bit lower into the winter. But at the same time, the demand right now for the hog sector is really good. So we're looking for more sideways prices there too.
And with a PED break, there's really no idea where this market could go. Like we saw last winter when it shot the moon, it could be another one of those.
It could be.
If it breaks.
Right. So again, wait and see. That's all we can do.
All right. Well, Naomi, thank you for taking the time to be with us this weekend.
Thank you.
That wraps up this edition of Market to Market. But we will continue our discussion and answer some of your questions in our Market Plus segment online. You'll also find audio podcasts and streaming video of our program, as well as links to our Twitter feed, Facebook page, and the rest of our social media outlets exclusively at the Market to Market website. And be sure to join us next week when we'll examine the contentious debate between Western ranchers and those hoping to keep the greater sage grouse from going extinct. Until then, thanks for watching. I'm Mike Pearson. Have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content. Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com. And by Sukup Manufacturing Company, offering a full line of grain drying and storage equipment and steel buildings. Sukup Manufacturing is on a mission to protect and preserve your crop and the tools that produce it.